Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Thursday afternoon. I'm Juliette Sarli. Gosh, we're almost through the first full trading week of 2026, going so quickly. Let's have a look at today because it was a better session. A lift coming through from a lot of those tech players, a little bit of a pullback coming through from miners, and we're finishing higher by about 0.25% there on the SIBO 200. Having a look at where the ASX 200 is finishing the day's session with pretty much most sectors higher. We are firmer on the ASX 200 by a little bit more, in fact, by 0.4%, 32 points, 8,728. So again, you know, we talk a lot about the switching in and out of the banks and the miners, and it does seem today that it really was a move out of some of those resource stocks, but tech was at the top. So some sharp gains coming through in technology and also healthcare stocks, and that offset quite a lot of those losses that we saw following a bit of a mixed session on Wall Street. A bit of a bullion breather though, oil and gold tracking lower amid some of this profit taking. Worth noting that iron ore also retreated after a 4-day rally, so seeing investors book quite a bit of profits there. And having a look at the materials sector, it is down by 1.3%. And then we've got Go Aussie Go there because the Aussie has hit new highs, not only against some of the, well, I guess against some of the majors. It's hit new highs against the Kiwi, against the Yen, against the Euro, against the Loonie as well. Bonds also rallying with the market really paring back RBA rate hike bets, although it's worth noting that the Deputy Governor Andrew Hauser was on the ABC saying that inflation is still too high, even though we did see, of course, that cooling in the November print to 3.4%. I was speaking to Paul Brennan from Suncorp earlier today. He was still saying that, you know, it is too uncomfortably high for the RBA, which wants inflation more around 2.5%. And remember that we've still got to get the traction coming through from the quarterly print as well. When we all opened our wallets, we all went on holidays, we all bought Christmas presents. So perhaps that cooling in inflation may be short-lived that we saw for the month of November. Let's have a look at some of the sectors. I mentioned tech really leading the way today. So we saw Zip in particular having a great session, up by some 7%. I know that XYZ Block was also doing well. WiseTech, Xero, NextDC, Tech One, they're all higher today. Gold though, a bit of a switch out of that. Remember, we had some quarterlies yesterday. We've had gold on this tear. No surprise that there was a bit of profit taking coming through today, particularly amongst Northern Star, which fell by around 3%. And then also having a quick look at some of these defence players still very much in focus amidst all the geopolitical uncertainty. Austal looking very good, as is Electro-Optic Systems. Drone Shield coming off, but it did have a pretty good session earlier in the week. All right, BlueScope Steel also very much in focus, rejecting that $13 billion takeover bid from the Stokes-led SGH and US firm Steel Dynamics. BlueScope off by about 1.3%. Ansell also being hit a little today, and this is on new CEO Neil Salmon will retire in February, but Morningstar says the CEO change is unlikely to disrupt its underlying business. Monadelphous also in focus, it signed new construction and maintenance contracts with some of the heavyweights like Rio, Santos, BW Offshore there, sending shares down about 2%. And we mentioned that defence stocks are still very much in focus. Elside in particular securing its first commercial purchase order for 2026 for its drone operations, down by some 2%. And sorry, I forgot Ramelius there, but we did see that a lot of those gold players were lower. It did reaffirm its full year 26 guidance, but shares were down by about 2%. All right, let's welcome to the COB Mathan Somasundaram from Deep Data Analytics, who joins me now. Mathan, I saw you on the call the other day, and you know we like to poke fun sometimes that you can be a bit bearish, but you're very optimistic about 2026.
Oh yeah, I think going into 2026, I think every year around this time you'll get everyone telling you that's the greatest time to invest. I don't think it's the greatest time to invest, but I think it's a great market to take advantage of, because unlike a fund manager who's locked into a particular thematic, particular cycle, particular size category, a retail fund manager, retail investor has no limitations. You have complete flexibility. You can be medium to long term, you can be short term, you can be a small cap manager for a period of time and then be a large cap manager. So I think the volatility is going to be dramatic in 2026. I don't think you have to predict anything. You can let the cycle play out and you have the flexibility to take advantage of volatility over the next 12 months.
All right, well, what did you like or not like in today's session? We're not that tech heavily focused or leveraged, should I say, but certainly tech and healthcare seem to be lifting us higher today.
Yeah, it's like a lottery entry right now, trying to pick who's going to be doing well on any given day. I mean, today it's a lower turnover and the global flow is dominating. So you can pretty much look at the way the market has traded in line with CBA because it's the biggest stock in the market. So global flow comes through to it first. It's 12% of the index, so it dominates. Resources have had a bit of a steam coming out, but they've been the outperformer over the last 12 months, massive outperformer. I mean, gold and silver had its run. Gold is still doing, I mean, the whole precious metal cycle is playing really well, and part of that is the weakness in the US dollar, and you've seen that through the Aussie dollar popping, and commodities are in a historical high. So a lot of commodities doing really well. So I can see why RBA deputy is saying, don't get too carried away that inflation's coming back, because inflation is still 3.4, and we've got commodities at all-time highs. So, and tariff effects globally haven't come through yet. So those kind of factors will keep inflation elevated. Central banks are kind of caught between the, I guess the weakening economy and elevated inflation, but it's still the bond market. It's all about the bond market. That's why I think 2026 is going to be fascinating, because I think the central banks don't have control anymore because the fiscal policies have gone out of control. So the bond market has taken control. So if one market goes up and down, it's going to create a lot of volatility.
Oh, some fighting words there, Nathan. What about if we do see rate hikes, which seems to be the way? What does that mean for some of these consumer stocks? I mentioned that we're yet to get the December inflation print. Everywhere I go, people are eating, drinking, things are packed, the shops are packed. What are you seeing there?
Yeah, I mean, especially if you're in Sydney, this kind of heat, everyone goes into the shopping centre for air conditioning. So, even the cinemas are doing well. So I think it'll be positive. Look, people are going to spend till the job market starts to really affect their spending pattern. At the moment, I mean, we've seen our services PMI in expansion mode pretty much the whole of this year. I mean, through a couple of years now. So there's no spending issue. So in theory, people are under pressure because cost of living is high. So spending is moving from one side to the other side, but they're still spending. So I don't think that's going to be a problem. But I think when you're looking for like, I think the Christmas sales will be slightly weaker. I don't think retail sales is going to be great. I think it'll hold up. But the trick is going to be, these are cyclicals, right? So as the economy slows down, consumer spending is going to weaken. And that's not really going to be a surprise. And so that will come through. I don't think RBA hikes. Even though it's estimated 2 hikes, we always do that. But RBA is not going to hike unless they're completely forced. So if RBA is going to hike, they're not going to hike anytime soon. They will wait till inflation starts to run hard and it becomes blatantly obvious that you have to hike. So I don't think you have to wait for a hike, but I think the reality of the economic slowdown is that consumers are going to spend less. And I think that's expected, and that's going to flow through to the cyclicals.
All right, well, we know the RBA has 2 mandates, or that dual mandate of jobs and inflation. Let's talk about US jobs and what we're expecting there on Friday.
Yeah, that's going to be interesting because all the, I guess, the non-key indicators like ADP, Jolt, all of them are suggesting there's a weakening in the job market, but the weekly data hasn't really rolled over. Now, non-farm payrolls is, at the moment, there's a certain level of Chinese data trust coming to non-farm payroll because it's so volatile. But I suspect we're going to continue to see weakness in there. It's been consistently going down for a while now, so I suspect that's going to continue. There will be weakness. Unemployment probably tricks up. Now, it popped in the last month, so it'll be interesting to see how much unemployment moves. The amount of, the US government is now trying to take over everything around their country. So that kind of tells me that the employment data and economic data is going to weaken. So I suspect it's going to be weak, but the market kind of expects that. But the question is going to be what the Fed does and what the bond market does in the back of this. So a US macro at the moment it's all over the place. We're talking about Greenland, we're talking about Iran, we're talking about Venezuela. You take a pick. You get on Twitter on any given morning, you're telling yourself, I hope they haven't done anything else. So when you're in that kind of macro, I think the economic news going weaker is almost a given. But on the flip side, we still haven't seen the consumers really pull the reins yet. So again, as long as the consumers are going to keep spending, inflation is going to keep rising.
And despite all the concerns and monitoring X or whatever social platform you're on, you still, Mathan, remain positive and optimistic for 2026.
Yeah, I think it's going to be very sector specific. I don't think the overall indexes are going to do much. I expect there's going to be a decent pullback in the major indexes. But I think there'll be specific sectors that will do phenomenally well. It's the relative performance that you've got to concentrate on. So sector selection is going to be huge. If you look at the last 12 months, if you weren't in resources, you underperformed. If you were in resources, you outperformed. So if you're a resource fund, if you're not out there marketing right now, you might as well give up, because this is your peak cycle. People talk about it is a super cycle in commodities. Well, most commodities, the key ones, are at all-time high. I think that's already happened. So the reality is, yes, the index potentially will struggle. I think when you're at 20, 25-year high multiple, that's obvious. But there are going to be specific sectors that are going to be massive winners. So do the work, pick your sector, enjoy the volatility.
Enjoy the volatility, enjoy the ride. All right, Mathan, thanks as always. See you soon. Mathan Somasundaram there from Deep Data Analytics. Well, of course, we've been talking a lot about this BlueScope Steel bid that has now been thwarted, and it was the stock of the day. Andrew spoke to our experts on the call, David Novat from Wealthwise Education and Howard Coleman from Team Invest.
Taking my money and run it, say thank you very much, Mr. Market. I'd take the money. No doubt in my mind, this is a great selling opportunity. I don't agree that it's significantly undervalued, as the board just said. So if I was a shareholder, unfortunately I'm not, I did look at this, by the way, this share price has doubled since September 22. So in 3 years, it's doubled. Profits have not doubled, so it's irrational to me.
Every board feels that they have to say to any offer they get that it significantly undervalues the company, because if they don't get an opportunity for the offer to be increased. And directors can get themselves in a lot of trouble if they don't appear to be getting the highest possible price. Looking at it, it's a sell.
Let's have a look at the market leaders on a positive day. Mesoblast there up by almost 8.5%. We mentioned Zip in the tech space doing well. Austal as well, as we continue to monitor defence stocks. Coda. Now this is an interesting one. I had a really great chat to David Buckland from Montgomery Investment earlier. This is a stock on his radar as you really try to tap into any company that will be able to make inroads into the AI thematic. Block also looking really good as we see this move into tech players. Speaking of AI, let's have a look at the laggards. Ansell falling, of course, on that CEO retirement. Linus also coming off, and then Capricorn coming off after a pretty good session earlier in the week. Nickel Industries as well down, and James Hardie off by some 3.6% today. In the small end of town, Alcidion had a particularly good day, up by almost 20% there. Terra Metals and Archer Materials also having a great session. To the laggards though, in the small end of town, Monica Resources again on the board, down by some 14%. Austral Gold and Epiminder also coming under some pressure. Tonight we've got the US Challenger job cuts. We're just talking about the overall key non-farm payrolls with Mathan, and we're starting to get a bit more of an indication on that jobs report with those Challenger reports coming through tonight. And look, there's nothing locally due tomorrow. We could always be surprised in terms of whether or not there might be some corporate news coming through, but it looks like it's going to be fairly light on in terms of economic data and set company news, at least for the final day of the first full trading week of 2026. Let's see where the market has finished. We're up by 0.25% there on the CBO 200. We were up a little bit more on the ASX 200, and we've in fact finished higher by 1/3% or 25 points to 8,720. Over the last 5 days though, virtually unchanged, and we're still about 4.3% below record highs. So that's quite a different story to where you're seeing the MSCI Asia Pacific Index, the Dow, the S&P 500 all tracking at or near records. All right, that does it for the COB today. We'll be back bright and early from 9:45 a.m. Eastern on AusBiz. We'll catch you then.